Europe plans to boost defence spending by as much as €800 billion. So is that an investment opportunity? Europe is rearming itself. The European Union's plans to ramp up spending could total €800 billion, including €150 billion worth of borrowing earmarked for investment in weapons and technology. That is potentially a goldmine for defence manufacturers that were long an unfashionable investment because they were considered unethical. Even investors from outside Europe are now keen to get involved, including Peter Andersen of Andersen Capital Management. Peter, you've bought into European defence recently. What's the appeal?
In this tumultuous world of investing right now, there are few gifts, and I would say this is probably the best gift we've seen so far this year. You know, with NATO, what's happened is since Trump is now the president and everybody knows his sentiment about NATO, the NATO members have decided to up their spending. Prior to Trump's election, they were spending less than 2% of their GDP. And remarkably, in November of last year, that abruptly changed. So that was the first signal that seemed attractive. Then, of course, the second signal is the new prime minister elected in Germany, where they are pledging of spending upwards of 100 billion euros in a rearmament program. So that was attractive too. And then lastly, last month, the rather tumultuous meeting between the US president and the Ukrainian president also signaled that this is a very attractive opportunity. And may I also add, due to the confusion of the tariffs in US investing, this is a very easy to understand, not complex, not subjected to random thoughts for the day, but easy to understand investment. So all those factors add up to what I would say is a gift for investors this year.
Peter, some of these stocks have seen huge jumps already. Germany's Rheinmetall is up more than 130% this year. Has market optimism already exceeded how much they actually will be able to increase arms production?
Rheinmetall, I am not an investor in because, in our opinion, it has so much dependency on the Ukrainian conflict, whereas many of the others are more generally focused on investing for their own benefit and defense. Yes, some of these are more expensive, but I would also say this, that compared to US aerospace and defense companies, they are still relatively cheap compared to the US. And remember, the backlogs of these European defense companies are now such open books that it gives us a very good clarity into the future cash flows, which in the US are very much difficult to discern right now.
It is politically controversial in Europe whether this government money should be earmarked for European companies or whether Europe should offer to buy more American weapons, potentially as part of a trade deal. But for you, why would you buy European manufacturers over American ones in this space?
Well, specifically for that reason, I think that there will also be a strong urge to build on their own and not necessarily import weapons from other countries. So that also is a diversification play because now we see that companies like BAE Aerospace, for instance, in our opinion, is that they will be building on their own and not importing. So it also ties in tremendously attractive to the fact that the tariffs present such a big question mark to all these international players that if you stay in your own backyard, so to speak, that eliminates the question of tariffs and makes it extremely attractive.
You mentioned BAE. What other picks do you have here?
We like Airbus also. We think that that is a very appealing company. Also, Rolls-Royce. These companies have been much off our radar screen for years, but as I said, since NATO has increased its spending, all of a sudden these companies and these countries are taken front stage.
You mentioned Airbus. Is it succeeding, do you think, in exploiting the complex problems its major rival Boeing has had over the last few years?
I think so, because Boeing is making it a little bit easier. Boeing has stumbled so many times that, sad to say, that sometimes you might profit at the failings of your competitor, and that is exactly what's happening now. I don't, of course, encourage that, but it's an obvious observation. And I do think that that sets the stage for competitors to really swoop in on that competition, yes.
That was Peter Andersen of Andersen Capital Management. Don't forget, you can watch more videos on Reuters.com.